Hi there again. Thanks for coming back to see us at lightbulbinvesting.com. Our business is really about helping you understand just the basics of how the market works. And the bottom line is the only thing that makes a stock price move is money. There's either more of it that wants to buy than sell, and hence the price goes up, or there's more of it that wants to sell than buy, and hence the price goes down. Along those same lines, it's important to understand that when everybody who wants to buy something has bought it, the price rise is basically finished. When everyone who wants to sell something has sold it, the price drop is basically finished. Now, those are important things to remember because that's exactly opposite of what you're going to feel like doing. Because when the noise is highest about an exciting move in a stock, meaning it's going up and it's rocketing to the sky, that's the last thing you want to do is sell it. Vice versa, when it's going to hell and there's no stopping it from going down and everybody is certain that it's going to zero, 99% of the time that's when you want to buy, and you're not going to want to have anything to do with buying it. So, a couple of basics. We tell investors, do not pay attention to headlines. They are of no purpose, no use to a long-term investor. If you're a trader, that's a different story. But see, I don't know a lot of successful traders. I know lots of successful investors. Consider turning off the news. Accept a couple of things about the market. All these bullet points you have to accept. We can disagree, but this is the way the markets work. And man, I wish they didn't. Believe me, I wish it was easy. But it isn't. It's the hardest thing you'll ever do. Building real wealth, and I mean significant wealth that we've seen clients build, will take a very long time. It's a lifelong process. You can't worry about a year or a month or a quarter or even a couple of years. In a 30 or 40-year period, I promise you there will be bad years. That's a given, and we must accept it. Institutional investors move 85% of the money. Now, who are they? Banks, trust companies, pension plans, sovereign wealth funds, hedge funds, high net worth individuals, trust departments, insurance companies. We can go on and on and on. They have boatloads more money than you and me. We move the other 15%. We're called speculators. We're called the crowd. And what you want to understand is the crowd invests on emotion and how they feel. If you feel good, you believe the future is clear and everything's great and stocks grow to the sky and you'll pay whatever you want, and the fact is you don't think about risk. When you feel bad, then all you think about is risk, the future is cloudy, and you won't pay anything for stocks because they hurt. The bottom line is you got to do the opposite. I know that's tough. That's the way it is. And we have to find a way to use that muscle. We all have a contrary muscle. We're all born with it, but a lot of us don't use it because we're afraid. We let our emotions run our feelings. We let our feelings run our investments. Here's the key. Institutional investors invest on raw data with far less emotion attached. Now, how do you know emotions work against you? You remember 1974? It was a bad time, except it was the bottom in the market. You remember 1982, how bad it was when Reagan was president? You remember that. Deficits went through the roof, except guess what? It was a good time to invest in the market. God, everyone remembers October 19th, 1987. At least I would hope so. Well, there it is. Except that was a good time to invest in the market. You remember the early part of the 90s, late 80s and early 90s. Remember, that was when Japan was going to take over the world. Nobody wanted stocks because real estate had just collapsed. Banks were going bust. A bank a minute. We lost almost 1,700 S&Ls back then. We arrested CEOs of banks because they defrauded us. They loaned money on office towers that were worthless. Japan came in and bought everything. You remember, they bought Rockefeller Center, all of our big buildings, all of our signature office towers. They bought Pebble Beach. You know, it was all about learning how to speak Japanese or you weren't going to have a job. Sound familiar to what you're hearing about China today? Because they're both going to end up the same way. That's another video, though. Look, The market went up though. See, everybody thought it was the end of the world, but the market went up. Then we had the mid-90s sort of double dip. We never actually had a recession, except guess what? The market went straight up when the crowd didn't want stocks. Straight up for 5 years. And then everybody wanted stocks. You remember 2001, 9/11, bingo, right here for 1 week. Except guess what? That's when you should have bought. No one could move, except that was a good value. When everybody wanted stocks was the top of the tech bubble. Man, people were quitting their jobs. The very jobs we were told in 1995 didn't exist, they were quitting them by the dozens, by the boatloads. You know why? Because all they wanted to do was go get an E-Trade account, open an online stock thing, get their account open, get their stock screen set up, and they were going to day trade their way to retirement on what? Tech stocks. You remember that, except guess what? That was the beginning of a 2-year collapse in tech stocks. And everybody went with it. Okay? Now, nobody wanted stocks here, right? That was the end of the tech bubble. After all, we understood what risk was then. Nobody wanted it, except it was already a lot higher at all these other places that the world was ending. Look at all those blue spots. Everyone's higher. Nobody wanted stocks here in March 2003. Guess what? Stocks went up for, well, 4 years. Then everybody wanted them. See, then there was a new world, new highs. We beat the old tech bubble highs. New highs. Everybody felt good again. Yep, and that's right on time for the global economic collapse. My point here is this. You can see decades of information, important turning points, and real wealth generators happen around disasters. Right when we feel terrified of stocks is when they're the least riskiest. Okay, so there's always things to be afraid of. Let's keep that in mind. There are always things to be afraid of. You can read the screen as well as I can. The time to invest in something is when no one wants it. That's a pretty basic thing. Remember, buy low and sell high. Too many of us quit what's not working, and I'm quoting here, I quit that because it's not working, Mike, and I went to something that was working. Do you know how many thousands of times I've heard that over the last 28 years? That's the equivalent of saying, I sold something while it was low and I bought something while it was high. I promise you that is a pathway to losing all of your money. Now, we can accept it or we can not accept it. It will have a great deal to do with how much money we make. Learn to feed the ducks. On the floor we used to call it, when the ducks are quacking, you have to feed them. When the crowd wants something, you sell it to them. When the crowd doesn't want something, you buy it from them. I'm obviously making some bullet points here, but there's a lot more to learn. The biggest thing you've got to learn here is your own worst enemy is you. What you want to do next is often what you hate to do now. Stay focused. When things are most hated, it is the most valuable. Trading in the short run looks like it works. It usually doesn't. We have to be investors and we have to focus on the big picture. And here's the big thing. You got to pick a path and stay on it forever. Period. What do you want to do next? Listen, I've been short here, obviously. Visit us at Lightbulb Investing. We've got a ton of free lessons, a ton of videos. Sign in, become a member, see some white papers. We'll tell you about what's next. We'll tell you some very major events that are unfolding around the world. We'll keep you abreast of that as sectors change. Look, it's all about understanding what's next. Don't pay attention to what's now. What's now is old news. What's next is what you want to be prepared for. That's the basics. I hope you enjoyed it.